Welcome back to Rockstock Channel. It is September 29th. I'm here at Bulls Lair in New York with Rodney. And we have, I guess you're from Sydney, Len Kolff from Atlantic Lithium, which just dual listed on the ASX after publishing a new updated, pre-feasibility study about their project in Ghana. So we're going to talk for the first time to Len. We've been an advisor to, invested in Atlantic, I think, since the middle of last year. And, you were just main board, kind of London listed, but we're very much historically, viewers of our channel know Rodney in particular has been a huge advocate for the fastest way to get lithium units into an undersupplied market are spodumene units, and if they could be dense media separation only kind of flow sheets, DMS only, that's also favored. So in a similar way, we've compared you to, I think, Sigma Lithium and Core Lithium from a project type as a DMS only, and then there's a number from a relative comparable basis on the ASX. There are a number of other maybe non-DMS but nevertheless spodumene developers like Liontown, or following in the footsteps of Pilbara and Altura and others that you will now be benchmarked to now that you're listed on the ASX. The aim is lame, we often say, from a liquidity point of view and from a valuation point of view, but that's how Iron Ridge, a former company, kind of got started. If you could talk a little bit about the history and your relationship with, Vince Mascolo and how you found this deposit. Not too much on the history because we want to go into the PFS and other items. But Atlantic's listed in addition to the ASX, A11.AX, and in London, ALL, I guess, .L. You also have an OTC listing in the United States, ALLIF. I own shares in that, in my retirement account, and I also own some London shares, but I plan to convert my London shares to ASX shares, which I think some other people will do, because you did list without raising much money. I think it was a block trade from Vincent Mascolo's estate, so there's not a lot of float in Australia at present. If you could talk a little bit about that as part of that. As always, nothing that we're saying here is financial advice, but we do advise Atlantic and Rodney earlier this year, part of our series, equity overview with Rodney Hooper, put out, a 10, 15-minute video summarizing his thoughts on the scoping study Atlantic had at that time. And Rodney will be, putting out, an update soon on, on the new PFS. But you are covered by Canaccord out of London, who I forget exactly what their target price is, but it was very high, I remember, relative to your existing stock price.
When it was 89p, I think, from memory.
89p, and you're currently trading around 38, 39p. Okay, so with that very long introduction, Len, Rodney's going to do most of the questioning from here, but why don't you just give us some background to the Atlantic story, your history, and then we'll go into the current state of play.
Great. Thanks, Howard. And good to see you again, guys, and Rodney. Good to be here. And lots to talk about on the Atlantic side with our listing and the PFS that's come out that continues to de-risk this fantastic project. Yeah, Atlantic Lithium, for some of you, you're aware, we used to be called Iron Ridge Resources. And it was the former and founding CEO, Vincent Mascolo, who sadly passed away early this year, who actually founded this company back in 2014, IPO'd it. And that was on the back of some grassroots iron ore assets in Gabon, hence the name Iron Ridge Resources, and also hence why we were listed on AIM at the time, because ASX wasn't really following many West African iron ore stories. So that's kind of that bit of a history there. The iron ore project didn't deliver, iron ore prices tanked, and Vince and I were both in the airport in Perth going, shit, what do we do now? We have to think of something. Fortuitously, the company was, had a healthy treasury, and it was a fantastic time to start looking for some other assets. So we decided to go on the hunt, and through that process decided to build a diversified portfolio in gold, and we've been following the Goulamina story at the time. That was with a guy called Kevin Joyce at Barimian Gold at the time. So decided to do gold and lithium in West Africa, not just one jurisdiction, but multi-jurisdiction, multi-commodity, because of our experience, my experience personally in Liberia and Ebola, that kind of put a whole stop to a project I was working on there, and our experience in Iron Ridge with just an iron ore project in Gabon and the iron ore market tanking. So that's kind of the history there. That portfolio that we put together basically, delivered a discovery in Ghana's first hard rock spodumene pegmatite discovery. So when we came in and made this lithium discovery, that just blew a lot of people away and really demonstrated that Ghana isn't a mature exploration field. It's a grassroots exploration field where you can make new discoveries. In our case, a hard rock spodumene pegmatite discovery that's within 1 kilometer to the national highway of Takoradi, and with 100 kilometers or 110 kilometers to the operating deep sea port of Takoradi, and within 100 kilometers of the capital Accra. It's just been sitting there this whole time. We were lucky enough to remake this discovery and relocate it on the ground. And we renamed Iron Ridge Resources Atlantic Lithium because we shared the seaboard with the Atlantic Ocean, with our JV partners through the Piedmont funding agreement, who are also on the Atlantic seaboard. So there's a bit of that history around the naming. And we thought it was very fitting in our naming around, where this whole EV revolution's moving to in terms of the American seaboard, the European seaboard, and that Atlantic Ocean that fits in all of those, and how Africa is going to be an integral part of that future. And that, by the way, was Vincent's pick. So it was Vincent's name that he came up with, which I think is really fitting.
It's a brilliant name. I've been trying to figure out a narrative with kind of like NATO, the North Atlantic, Treaty Organization, to just kind of figure out, like, not destined for China, spodumene. But you mentioned Piedmont, they're earning into a 50% ownership, but Ghana is one of the few places in the world where you can have competition, with China and non-China players. I guess for the other 50%, that's something we could talk about a little bit later. But there's a lot of places that are currently off limits for China, and Argentina is not one of them. And we've seen recently, Ganfeng buy into, an Argentine asset at a very high price after buying into an African project, which is somewhat comparable, Leo Lithium, although they got 100% of the offtake, I guess, stage one, compared to only 50% of the offtake that Piedmont got. So you got a better deal, I guess, than Ganfeng offered Leo Lithium. You mentioned 100 kilometers from the deep water port. Leo is what, like a 1,000?
Yeah, well, just under 1,000 in Mali. It's a landlocked country, so it's got some big challenges from a logistics point of view, but 20-year mine life. It's a big deposit, 108 million tons. And with Ganfeng there, I'm sure they'll get this thing into production one day, but doesn't come without its challenges.
Why don't you fast forward, I guess, Len, to where you are today, size, and you're talking about production as early as 2024, one of the few lithium projects on our lithium scoreboard that can get into production before 2025.
Yeah, definitely. So the PFS was a big moment for us. Obviously, it's a big year with both the dual listing and the PFS, and delivering that to market in the time frame that we said we would. And I think importantly, the PFS has delivered a fantastic result that has some fundamental differences to the updated scoping study that we put out in December last year, and it's important to understand those differences. But when you look at the valuations of our project, the NPV, post-tax NPV and IRRs, it really brings this project home that it's a standout, which really comes down to those fundamentals of simple mineralogy, so spodumene only, proximity to operational infrastructure, and adjacent grid power DMS only process flow sheet, so low power, low water, in a mining friendly jurisdiction of Ghana, with a skilled labor force right on your doorstep, and people that want to come and work on this project because of where it's located. They can go home to Accra, over weekends, or live in Cape Coast or Salt Pond and be home at the end of every day shift. So that's quite rare in the mining sector, and I think that'll be a big draw card for us.
So Len, yeah, congrats on the PFS. I mean, good timing and great results. Just a few things to go through, I guess. Looking at about a 12.5-year mine life, but there was a cutoff on the resource. Where to from here? How's the drill program going? How's that progressing? I've got in my models, I think you can get to 20 years. What are your thoughts there?
Yeah, so we started in March this year, a 37,000 meter drill program, that we're really on the final few holes now. So we should be finishing that one pretty shortly. And we've announced a few, a couple of results from that program to date. And we expect to have, results, continuous news flow going through to the end of the year, or leading into a resource upgrade, hopefully at the end of this year. But some fantastic results outside of the current resource footprint, which will add more tons to the resource as part of this program. Now, that 37,000 meters, roughly 2/3 of that was designed as infill, so it's to convert the remaining inferred on the current resource, which is roughly 10 million tons of inferred, to convert that to indicated. And there was to convert the first 1.5 to 2 years of indicated to measured. And then 1/3 of that drill meterage, or the remaining 1/3 of that meterage, was towards exploration drilling outside of the current resource footprint to grow the resource to add tons. So I think that we announced roughly maybe a month or a bit longer ago now, 69 meters at 1.34%, and multiple 50+ meter intercepts at 1.2% or thereabouts, all outside of the current resource footprint. So I'm pretty excited about the additional drilling that we've got ahead of us in terms of results, and adding the potential to add more tons to this resource. So all going well, the end of this year we should have that out, and that will then feed into the next phase of studies, and to get us that proven reserves, and to convert more of the resource into mine life.
Okay, great. Just in terms of timeline to production, I mean, obviously permitting will be what it'll be, but just looking at COVID and some logistical challenges and so on, lead item and delivery times, are those all sort of manageable these days?
Yeah, look, I think our key item obviously is permitting, and that was a real drive for us to get this PFS done, because that is our first step to kicking off permitting, and it allows us to start that process. And all going well, that's a 12-month timeline to be permitted. Obviously, that requires approvals, government approvals, and you don't control those timelines, but that's what we're working towards, and hopefully we can achieve that alongside the government, because they're very keen to see this project come into play, and to demonstrate to the world that Ghana is open for business. It's not just a gold destination, and they're a critical player now in the world's pathway to decarbonisation. So they're keen to support us and to see this project come into production. Once the permitting's in, so from our project timelines, we're working towards a resource upgrade the end of this year, which will then feed into the next round of studies, and targeting DFS completion end of second quarter next year, all going well. So in theory, if we're permitted by this time next year, we'd be in a position to break ground at the project site end of 2023, and build the plant for production mid or late 2024, and that's on producing, you know, DMS concentrate. But we also need to weigh that up around getting the mining license application underway, and locking in an ML, which is critical for the project to come into production on the earliest possible timeline. But in terms of once we have secured an ML and it makes sense to look at bigger throughputs, then or you're looking at those earlier rather, the plant, the project footprint can host that, because if you're going through a larger footprint on the same mine life, your waste dumps are still the same size. You're still tracking the same volumes of SC6, and you're still looking at the same stockpiles at port area ahead of loading onto ships. But if we grow our resource materially to, to a 40 million ton resource, for example, then, how does that look like? The project can still carry it. There's availability at the port, it's a tight area where the project is, but I think you can still grow the footprint smartly to accommodate that.
Okay, and then I guess one of the key attractive features of Atlantic is you still have the availability of your share of production, but because of low capex, even with the going above the 70, I mean, your share is really small. So you still have the flexibility of deciding what you're going to do with your material. Is something like BMX, because you don't have big financial commitments to make into the capex, would you look at something like the BMX auction platform, or are you still thinking about a strategic partner? How's that looking?
Yeah, look, we've been so focused on delivering our PFS and the dual listing that we just haven't had time to think about that, although it's very high on our priority list about strategically, what do we do with our remaining share of mine production, so 50%. Now, look, I think that in its own right is highly strategic and highly valuable, and really sets us apart from our peers, I believe. And we shouldn't rush into something until we've really understood well what kind of offtake structures potentially are out there, or what's important to us to de-risk or add value to this project further and for our shareholders. So we're starting that process now to really understand structure of various offtake agreements. What is it in a potential offtake agreement, if we go there, that could add more value to us? Because as you said earlier, it's not that we're looking for a lot of capital, given the low cost, and with the Piedmont agreement, the funding that we have up to 70 mil, and then sharing the remaining overruns 50-50. So what other things can you structure around offtake that add value? That's what we're trying to understand now, before we decide on those next steps, and also the timing thereof, because at this point in time that 50% that we still retain is highly strategic.
So I wanted to talk about the relationship with Piedmont. Why did you pick Piedmont as a partner? What is the joint venture? You said they're earning in to 50%, but they've committed $70 million. But your higher capex now means that Piedmont will have to put in a little bit more. You'll have to put in is that 70 against the 125, meaning there's like a 55 gap that needs to be split. Right. So that's the 27 million or so that you'd have to put in. The Piedmont relationship is for the Cape Coast portfolio. So I forget exactly how many tons you have. Like what you mentioned, Leo Lithium is 100 million ton plus deposit. what's the scope from talking with Piedmont and Lamont Leatherman, who've been out there, they seem to think that there's enormous exploration upside beyond what you have. But like, what you have a great project, unbelievably low capex, unbelievably high IRR. I was just doing the math. The NPV that you came out with was 1.33 billion based on a $1,360 spodumene price. That's lower, than Rodney, who's relatively conservative, long-term, spodumene forecast. But even with that, you're at 1.3 billion. If you take your market cap, the pound is almost at parity. I was looking at your market cap is at 109, but you have about a 250 million US market cap. If 50% of that is you, it's a 500 million, off of 1.3 billion. You're trading at 37% of your NPV. As a business model, if you're building a brine integrated plant, or if you're building even the Piedmont's, integrated plant, these are $billion, projects. They tend to have 35, 40% IRRs. Here, very low capex, very quick payback, whereas 5 months. It's like, as in a business plan, it's unbelievably exciting. One would think like, the risk is low. The re-rating potential, I think, is, just on what you've currently outlined is very attractive. But the exploration upside, and the fact that, again, unlike Leo Lithium, it's hard to take over Leo Lithium, if Ganfeng has 100%, of stage 1 offtake, and there's not much kind of optionality for them. Whatever the price negotiated, they'll get for that. But the optionality that you have on your other 50%. Anyway, there's a long-winded kind of like intro to a question, but there's a lot out there. Just if you could talk about why Piedmont.
It's American Lithium. There'd been some issues in Australia with offtake agreements on the Chinese front, and that was something that there was a bit of concern in the market around. And he felt that this was a good solution and to potentially de-risking this project further. So Piedmont were interested. They actually came to site. Lamont and Patrick came to site, spent a week on site, and they liked what they saw, and saw the upside and similarities with their project at the time, and proximity to where they were. So hence why ultimately the deal went ahead at the time, which we all thought was a fantastic deal. Pricing took off, and everybody's going, "Man, you're crazy. Why did you give away half of the project?" But I mean, things change, and we're still extremely happy to have Piedmont on board, and have been a very useful partner to have there. And it's helped us push activities hard on the ground, and has helped us to continue working at the rate we have without the need to go back to market to raise capital each time. And especially when Vince passed away, because that was kind of his bread and butter, was the corporate side. My focus was the technical side. So when Vince passed away, and it was like, well, what are we doing next? And I said, well, for me, a big part of it was the fact that he'd secured Piedmont, we'd secured the funding. It was really around operational delivery. That was the key focus to add value to this company. And that helped me make the decision of stepping into the role that I am now. So I think that it's worked out really well, and we work very closely with Piedmont. We have a monthly. We got a technical committee. I'm actually meeting the guys, or Patrick from Piedmont tomorrow here in Sydney. We got a technical meeting with those guys and a SAW, plus our study team. So it's going to be an exciting meeting, and it's been really useful around their learnings on the Carolina project, and given that step ahead of us. We're now going to the next stage of their study. They've crossed a lot of those bridges, and we can learn a lot from that. So that's been really useful. So that's the Piedmont side. So we're currently in stage 2 of their funding agreement. They invested, I can't remember the exact numbers, but it's around $11 million US into Topco, which gets them just under 10%, or got them just under 10% of Topco. We're now in stage 2, which is 17 million US to studies, drilling and studies. It was halfway through the PFS at that stage and the DFS. So we're now roughly halfway through that, a little bit more. And once that's been spent, they'll earn 22.5% at the asset level. And then, dependent on those results, they can then decide, okay, we want to go to stage 3, where they then fund $70 million towards CapEx. And once that's been spent, they then earn 50% at the asset level and have a right to 50% of the offtake at market rate. And we retain 50% production. Any cost overruns or underruns are shared 50-50 between Atlantic and Piedmont. So that's the structure of the deal.
Okay, and the relationship with Assor and if a bidder kind of coming, just like there's such a shortage of spodumene, I mean, you would think that the Chinese would be all over you.
Yeah, everybody has been all over us, and yes, very strong Chinese component to that, and now we're seeing a bigger portion of other non-Chinese components. But yeah, as I said earlier, we're very focused on delivering our study in the dual listing, and now that we can breathe again, we'll start looking at the next steps. But we're really focused on now the resource upgrade, next stage of studies, and then breaking ground towards and permitting, and then mine development and production. So that's really our core focus. Assor, who have been a major shareholder and one of the founding shareholders along at IPO, and they've maintained their roughly 25% shareholding right from the IPO stage through to where we are now. They originally came in on the back of a potential iron ore discovery in a grassroots destination that didn't deliver, but like the idea at the time of Iron Ridge was like a frontier exploration vehicle. Their focus and their skill sets on mining and processing plants and marketing products. They're an iron ore, ferrochrome and manganese miner, and they recently built a ferrochrome plant in Malaysia. They were listed on the JSE, but then privatized, and they're a family-owned business. Very big business, and they had a very long working relationship with Sumitomo, who also came in on the original IPO. But so Assor, they want to see this project built as well, and we're pushing that way now, and continue to de-risk this project going forwards.
That's good color on Assor. What's the percentage ownership, and do they have representation on the board?
Yeah, so Assor have maintained their corner right from the IPO, so in that order of 25%. I think they're just currently sitting a bit under that at 23, but always around that mark. And they've got 2 nominees to the board that have changed over the years, but have always been there and supportive. So been a very loyal and supportive shareholder from the get-go.
Okay, so there's no risk of someone kind of coming in here and picking you off cheaply when you have such vested interested parties that understand the undervaluation.
Right.
I can't imagine Assor would be selling at anywhere near these price levels.
Then obviously the ASX listing looks to have gone well done on that timing. You certainly got it through in good time, I guess. As a company expectation, what are you hoping for? Are you hoping in time that sort of trading volumes and ownership gravitate towards the ASX?
Yeah, look, so the company is domiciled in Australia, even though we were listed in AIM at the time, and that was by virtue of these grassroots iron ore projects in West Africa. But a large chunk of our shareholders, roughly a third, are Australian. So it kind of for many reasons, it made sense to bring it here and bring it onto the ASX, notwithstanding, there are not many comparables on AIM in the lithium sector. And the UK market is maybe a bit more generalist. And you tend, I think, to see more, although we've got a very loyal and supportive retail shareholder base in the UK, and we continue to nurture the relationship with those guys because they've been very supportive throughout the company's history. But overwhelmingly, the investment or investor profile in the UK on the mining stocks is more generalist and at the bigger, more dividend-paying type companies. So it's a hard space to crack, and that's really changed over the last 10 years. Whereas when you look on ASX currently, especially in the lithium sector, it's had a massive run, and you can see multiple lithium companies that have performed very well on the ASX. So I think, it's several, number one, we're domiciled here, all the key management lives here. Number two, the ASX sector on lithium stocks has performed very well. And number three, a large chunk of our existing shareholders residents here in Australia. So, it's all of those reasons made it really compelling to come on to the ASX.
And you're listing on the ASX, I think I don't know if I mentioned that earlier, but you didn't raise any new capital, but Vince's estate, you placed some shares. It was like $5 million worth of shares or something like that.
Yeah. So it's really managing Vince's estate and building a liquid market here in Australia and coming onto the ASX. And we thought it was a very neat way to do that without diluting existing shareholders, and to basically bring on a large portion of Vince's estate into shareholders' hands here and create that market that way, in addition to management with options that they couldn't exercise. So I think that was a good way to come onto the ASX and to create that market here. And we'll see how that performs. So we came on, there's a slight difficult day coming on, but I think we've seen our share price improve here on the ASX. So I'm really excited to see how that performs going forward as we get the story more widely known here in the Australian retail sector.
Well, as good a name as Atlantic is, your ticker symbol A11, I think couldn't be better. Hat tip to you on that. You came onto market in a difficult week, but any ASX investors out there that don't know Atlantic Lithium, but have had some experience with hard rock spodumene deposits and had a great success in Australia, this is like a no-brainer. I'm sure that your hot copper following should catalyze, and so I wouldn't expect. Anyway, we think that a re-rating is justified, and again, not investment advice, but of all of the companies, the complexities of various stories kind of out there relative to their valuations. This one, again, eye-popping IRRs, NPV, relative value, and de-risked partnership, with optionality. Anyway, thank you very much, Len. It's been great to be working with you. It's been a challenging year on both sides of this screen. But look forward to meeting you sometime in the future. Maybe you could visit North Carolina instead of Pat Brindle coming to Sydney, and then we could take you to some face-to-face meetings in New York.
Excellent. Thanks, Howard. Thanks, Rodney. Great to see you guys, and look forward to meeting face to face.